Hey there, welcome back to No Pants Profits. My name's Richard, and this setup has been kind of absent for a while. If you joined this channel because of my cruise ship stuff, don't worry, I've got something for you too, but we're going back to the roots of this channel. It was originally a finance channel, it is still a finance channel, and as soon as IPOs started up again with AMD, trust me, we're going to talk about AMD, we'll talk about oddity, that was an oddity a few months ago, people have been asking me, when's the IPO stuff coming back? And I'm finally comfortable enough to do it, and I want to explain that all to you. Some of you that have been around for a while might know I talk about companies before they go public. I've talked about private companies, venture capital, different things like that. Those of you that know that, hey, welcome back. It's been a while. I want to talk about why it's been a while. Those of you who don't know that, I want to show you how there's a potential to get in on the ground floor of companies. Well, I've shown you a little bit earlier with things like Sweater, which we might get to when we talk about this, which is venture capital. But you can get in on the ground floor of a lot of these companies using common trading apps like Robinhood and SoFi. You can get in on the ground floor of these companies before the public is able to, well, before the general public is able to. And that's something that until a couple years ago, like 2-3 years ago, was just something for the finance nerds and the people that were accredited investors and stuff like that. But now you can buy an IPO or initial public offering of many companies. But I know some of you that are newer here, my last 2,000 subscribers or so, say, isn't that the drunk guy who goes around drinking rum? It's a little thimble of rum. And that guy who goes around drinking rum on cruise ships? Yeah, but today I'm going to drink some rum, that I ordered on Instacart? Well, I didn't order this one on Instacart. I had this one sitting around. It's not. Ooh, it's good. It's not nearly enough rum though. So I went on Instacart and ordered me a whole bottle of Zombie. You can hear. I put it in with some ice. Yes, that's the closest thing I'm going to get to a wine bucket. It's been sitting. Oh, it's got ice on it and all that. Here. Oh, look at that. Let's have it. Let's delve into why IPOs are. Oh, that's delicious. Ooh. Let's delve into why IPOs are back and why Instacart may or may not be a buy. Now, if you've never watched one of my IPO overviews, oh God, those are my first two drinks. If you've never watched one of my IPO overviews before, they're kind of like the Spider-Man shirt. We look at all the sources. We look at the source, which is the S1 document. We look at market conditions. We look at all the Spider-Mans pointing at each other, and we say, is this going to be a good investment? We also look at an IPO for AMD, which came out yesterday. But I want to get started right at the beginning. Don't worry. We got plenty of time for that whole bottle. And I want to talk about why IPOs are now making a comeback and why companies think they can finally go public. So, we are looking at data from the United States federal funds rate. That's the interest rate. Now, a lot of you that are finance people are going to know what the interest rate is. I'm going to break this down a little bit. Your credit card, you get charged an interest rate on your credit card. Your home loan, your car loan, other things like that, you're getting charged an interest rate on. You'll see there's this nice little step ladder, or nasty little step ladder, as some would have it, of interest rates going up from near zero all the way up to 5.5%. Now, why might this right now be the time that companies are starting to go public again? Well, because a lot of people believe, a lot of industry players believe that the interest rates are what are called plateaued. They've reached the top. This is the last year, and you'll say, holy crap, that last year looks like a disaster. It's just step up, step up, step up, step up, step up, step up, step up. Now, in places that are not hot, I live in South Florida, so I mean hot as in like attractive for people to live in. Housing has fallen. There's more unemployed real estate agents than ever, if you believe the news and everything like that. No, in the areas that are hot, like South Florida, it's still hard to find real estate, even at an interest rate like that. These interest rates are crazy because this is the prime rate. Essentially, what this is what the federal government, the U.S. federal government, yes, this stock is on the U.S. stock exchange. So if you're not U.S., you may still be able to buy it via international exchange, but it is a U.S. stock, so you'd have to buy it from the U.S. federal government. You'd be buying it from the SEC, and we'll get into those regulations. But the price of things in the U.S. is based on that. Now, if we zoom out a little bit, we'll see what happened during the pandemic, during COVID. I mean, do you see where interest rates are? That was before COVID, at like 2%. And the idea is the interest rate, or the prime rate, kind of keeps up with inflation. Now, that's not the real rate. The prime rate, what the prime rate is again, that's the amount that the government will loan money to corporations at to then loan it to you, the Federal Reserve. So they're going to put a bit of profit on it. So, I mean, you're looking at, almost 10% right now on a 30-year fixed loan. Your credit card rates are like 35%, even if you got an 800 credit score. So, yeah, you'll find promotional rates here and there. I love when I see promotional rates in email. But yeah, this is a problem. And look, if we look at the last 10 years, we had near low interest rates, 2016, then we had to climb up, and then we had a pandemic and they went down. Now, the pandemic made it very, very easy to borrow money. So, you had a lot of startups, you had a lot of things like that. When the interest rates are high, people will pay you more money for just holding your... Do I have any here? Oh, cash. I don't have any cash. People will pay you money just for holding your cash in a bank account, and you don't have to put as much risk to make the same level of return. And that's why when you weren't holding cash in a bank account, you see right here, the 2020 to 2022, you know what surged in that 2020 to 2022 area? Give you a second. Bitcoin. Bitcoin surged in that area. Now, I mean, if we take a look at interest rates right here, and we take a look at Bitcoin price, we'll go out to this same 5 years. It's kind of inverse. You notice? Bitcoin surged up when interest rates went down because it's a riskier asset. IPOs are a riskier asset, and that's where things get interesting. Because if people believe we're what's called a plateau, or the top, meaning if you look right here, you'll see my mouse, we hit the top right here. Let's go out to 5-10 years. You see, we hit the top right here, where my mouse is right there, and then it went boo. Now, that was mainly due to COVID. It's not really going to fall that fast. Let's take a look. There's been different times where it's actually fallen pretty fast, but you'll notice that it may be getting a plateau. You see this area right here, or that area right there. And what comes after a plateau is people are willing to take on higher risk assets. IPOs, venture capital. Even though venture capital has done extremely well during here. We're going to talk about venture capital. We're going to talk about IPOs. But first of all, what we're going to talk about is we're going to talk about the IPO that came out on Thursday, September 14th. It's early in the morning on Friday. And that is AMD. Now, I didn't think it was that AMD, but it actually is. Not AMD, sorry. The zombie's getting to me. It's not AMD. It's ARM, which actually makes ARM chips, which if you have an iPhone, an ARM chip is what's inside of your iPhone. If you have a Microsoft, oh God, I have one right here. If you have a Microsoft Surface, and it's not the Intel one, an ARM chip is what's inside of your device. If you have pretty much a lot of tablets and stuff nowadays, ARM chips are what are in your device. And ARM just started trading less than 24 hours ago. I try and do this so we can look at this during a closed market. It just started trading less than 24 hours ago. I did put in a request for, I think, 10 shares on SoFi, which is one of the apps you can request IPOs. You're able to request on Robinhood as well, which we'll take a look at later. I put in for SoFi. I got it at $51. It's currently at $63.59. Now, that is different, and you're going, hey, Rich, why didn't you bring ARM to us? Why didn't you bring a video on ARM? Well, because it's been the first IPO that the public have been able to buy in a long, long time. That's not a shitty IPO. And I'm sorry, I said shitty. We're 9 minutes in the video. That's not a shitty IPO, believe it or not. And also, that is not a that doesn't have an insane price multiple. A lot of IPOs, a lot of businesses that are just kind of getting going and going to market, are not even going to be profitable. Take Uber. Take Lyft. Take a lot of them like that. And when you have a company that is not profitable and interest rates are going up, well, they're like poison. They're like poison. But AMD, yeah, not AMD, ARM is actually a profitable company, has a 100 price earnings ratio or so that I saw, and it's not crazy, the market cap and other things like that. Now I will tell you, there's another IPO that came out very, very recently. Okay, so we'll see. Again, this is just one day. You see it opened at $51 and ended at $63.59. We're not into pre-trading yet. We still got a half an hour. There's another one that came out a few months ago that's not fared nearly as well. It was called Oddity Tech. I think I requested 100 shares and I got 30. And the problem is when you get IPO shares on Robinhood or you get IPO shares on SoFi, again, we'll go through the process a little bit later, but when you get these IPO shares, let's go to 1 month, 3 months. I mean, it's just been well, the last month is bloody. And the last 3 months is, I bought it at 30, so what did I buy it at? I bought it at $35, it's $36.98. But you're locked. When you get these IPOs, why you have to make this decision up front is if you're going to buy it at an IPO price, it may spike, like ARM. But how long can that spike stay up? They start fining you or not giving you IPOs again, because guess what? Normal investors, me and you, shouldn't have access to buy these things at this price. They're for institutional investors, for banks, for other things like that. So you're going to have the opportunity coming up, and when I say coming up, I mean coming up pretty soon, to get into, let me move that away. You're going to have the opportunity coming up to get into some new IPOs. So let me find some new IPOs. So the new IPO we're going to be talking about today is Instacart. So you'll see we've got Instacart right here. This is in the SoFi app. We'll look in the Robinhood app. But Instacart is, well, what do they do? Well, they're kind of like Uber. Well, not really. It's a gig economy. If you've ever heard the term gig economy, we're going to watch some of Instacart's videos. We're going to go over everything. I'm going to make a decision on whether I'm going to be going forward with this or not. Because when you go through this process, you actually say how many shares you want and other things like that. And I indicated I was interested in 100 shares of Instacart, which would have a maximum cost of $2,800. Now, when you do this, you are not committed to it. Now, what I've done is I've requested 100 shares of Instacart at both Robinhood and SoFi. So that's in SoFi. I'll pull up Robinhood in a minute. You do have to make that indication of interest, I think, by Monday. And then Monday night, they will tell you what the final price is. And you know what? Due to right here, due to what just happened here with, not Instacart, but what happened with ARM, they're probably going to go towards the higher end of the range. There's some articles saying they're going to go towards the higher end of the range. Well, you're going to find that out on Friday the 15th, the 16th, 17th, Monday the 18th, and it's going to go live on Tuesday the 19th. So I can go and I can see, this is how IPOs work on SoFi. Let's see if it wants to show me anything useful. IPO. Oh, yeah. Step one, you got to see what they are. They do make you read the perspectives, which everybody says, agree. I've not read the perspective on Instacart yet. We're going to read the perspective on Instacart together because that's the fun part. We're going to do it together. But you can also request this IPO. You just go up to the little search box on Robinhood and you put in cart, which is the symbol for Instacart. And I put in a request for 100 shares. At their max price is actually giving the price range plus a 20% buffer. That 20% buffer may be used. So I've requested a total of 200 shares of Instacart. But the request doesn't mean anything. You have to wait until you get the final price, and then once you get the final price, you can decide whether you want to do that buy or not. So what we're going to do right now is, when you're reading about all these companies and you're going in and you're doing all these things, it makes you actually read I know, it's crazy. It makes you actually read the prospectus, makes you read what the company wants to say. And I noticed when I opened up this prospectus on my computer, Instacart's name is actually Maple Bear. He's the owner of Instacart. And I can get in. And, we can take a look at video and slides, video only. So let's open up video and slides. Wait. Video and slides. Video and slides. All right. Let's go ahead and open up their roadshow. This is kind of their pretty... I'm going to open it up on my computer. Let me open it up on my computer real quick. This is their kind of pretty version of what they want to actually show you here. Again, their pretty version of what they want to show you, everything they want to show you about their company. And then there's also an official document that we're going to look at called the S1. So this is the pretty high-end PowerPoint that we're probably going to scroll through, and we're going to be done with this really quick because this is all the stuff they want to show you, not all the stuff they have to show you. Let's just see. We got the company overview. Hold on, let me send it. We're going to scroll through here, but yes, it's called something Bear, just kind of a strange name for Instacart, but the actual document they have to use is right here. This is what is filed with the United States Securities and Exchange Commission. And this is the actual registrant and everything for Instacart, or Maple Bear Incorporated. My computer is thinking about getting this document over. Maybe. Oop. Not sure what's going on there. Okay. Again, shouldn't really do this live, but I do because I like pain. But let's go ahead and we're looking at the official document. Maybe we'll take a look at their roadshow a little bit later. But before the official document, I went too quick. Let's take a look at what the hell Instacart does. So I went and I looked up, handoff cannot be completed. I went and I looked up a little bit of how people make money on Instacart, how Instacart makes money. Now, this is positioned towards people that are working for Instacart or gig workers working for Instacart. If you're not familiar with Instacart, I'll tell you, till I ordered this delicious zombie cocktail, I was not super familiar with Instacart. This is not going to be an overview of the Instacart app, but let's just kind of take a look at what Instacart does.
With Instacart, you have control over where, when, and how much you shop so that you can earn money while balancing work and life. This video will share how you can easily track and access your earnings using the Instacart Shopper app. Before shopping, you'll want to set up direct deposit. Funds are automatically deposited into your bank account, so you won't need to handle a physical check. To get started, go to the app menu, then select Earnings. Next, select Direct Deposit and enter your account information to complete the process. Don't forget, Instacart can only deposit funds into checking accounts registered in your name. Your shopper profile name must exactly match the name, including spelling, on your bank account. Once you're set up to receive funds, you'll be able to see available batches in your area. A batch is a unit of work that can consist of one or more orders. You can review information about the order and where it will be delivered, as well as the estimated earnings before deciding whether to accept a batch. In the Earnings tab, you'll see a breakdown of your weekly earnings. Funds that come directly from Instacart will be seen separate from your customer tips, 100% of which go to you and are completely independent of your batch earnings. If you need to access your earnings right away, you also have the option to use Instacart's Instant Cash Out feature. As long as you have at least $5 in the Shopper app, you can securely access your funds in as little as a few minutes. As a full-service shopper, you have the flexibility to work as little or as often as you want, helping you take charge of your financial goals. Thank you for choosing Instacart.
All right, so that's kind of an overview of Instacart. Again, I am thoroughly reviewing Instacart right now, if you understand. We're going to take a look at some stuff from Instacart drivers and everything like that. But let's look at the S1. Ooh. So what is the S1? Well, the S1 is a document from the Securities and Exchange Commission, which tells you about a private company before it goes public and tells you for some reason this company is named Mabel Bear. Now, I took a look at that roadshow, and most of that roadshow is actually in this S1 while I played that video. So, again, they're registered in San Francisco, which, yes, there's a whole bunch of homeless people that live outside of where they're registered, because, I mean, that's what's going on in California right now. Sorry. But they have their law offices in Palo Alto, San Francisco, and New York. So, they are issuing 22 million shares. Now, what we're going to do is we're going to go through this document first. Then we're going to take a look. Whoa. Then we're going to take a look at news articles and everything like that. But okay. So yeah, they're going to issue 22 million shares at whatever price, and they could be what's called a decacorn. We are making this at 3:41 a.m. They've not priced yet, but due to that spike that happened in ARM, not AMD, they might go up. But before, this is not sitting in some water, so let's I gotta wake up and order my iPhone in a few hours. Ooh. Okay, so decacorn. A unicorn is worth $1 billion. A decacorn is worth $10 billion. The high end of their range has it at $9.1 billion, but their private valuation was like $40 billion. We'll get there. But they said they want to list their stock between $26 and $28 per share. SoFi is factoring that $28 per share, which is why it shows a lower overall cost than Robinhood. Robinhood is adding, I believe, don't quote me, but I believe a 30% or so. They're adding a buffer. Yeah. So yeah, they have a buffer. So they're predicting the price could go as high as $33.60. That's what Robinhood's predicting. So they're saying, hey, that price could go as high as $33.60 because they think that it's going to go, well, they think that it's going to go well above that range, which, I mean, it very well could go well above that range there. But, all right. So let's go ahead. Let's scroll through their roadshows in here. Then we're going to look up some articles that I've pulled up, some that are relevant right when this came out, and some that are relevant after ARM, not AMD, came out. Especially, here's a fun side note. ARM doesn't make any of the processors inside this or inside the phone. ARM is literally just a patent warehouse that sells their name and sells their copyrights. So you do you, ARM. That's why ARM is coming in as profitable. We don't know if Instacart's profitable yet. Hopefully, we'll see some green. All right, so Instacart. They've entered into an agreement with Pepsi. So Pepsi has bought a lot of their stock. Interesting. So the preferred stock level conversion price equal to, so they've entered into an agreement with Pepsi. Now, they can't fill in this initial public offering price. There's some discounts and stuff like that. Who's underwriting it? Big companies are underwriting it. So big companies are putting their name on the line to say this document, not the price of the stock don't matter, but to say that this document and the information in this document is accurate. So we're looking at their official document roadshow, but you've heard of Goldman Sachs, JP Morgan, Bank of America Securities, JP Morgan Securities, Oppenheimer I've heard of, Piper Sandler. Hey, look at that. Look who's one of the people underwriting it. No, we were looking at SoFi. We don't have Robinhood showing there, but let's see. No, but I put in 100 shares at each. I'll probably keep it there unless I find something just disastrous in this report. Bet you I'm going to get more on SoFi than I do on Robinhood. Just saying. All right, so the leading grocery technology partner with 1,400 plus retail businesses that represent more than 85% of the U.S. grocery market, including things that aren't really grocery. Best Buy, Dick's Sporting Goods. Let's see what else is in grocery. Five Below. Uh-oh. Should somebody tell them something? Hold on. Fries. I think someone needs to tell them something. Yeah. Fries is out of business. I wanna call out my friend Bill. We were in Vegas years ago. I wanted to go. I wanted to go to a Fry's, and he goes, "Don't worry, we can go to Fry's another day. We don't gotta go to Fry's. We're in Vegas." And guess what happened? Fry's closed for good February 24th, 2021. I'm not gonna lie, that ain't a good look to have the Fry's logo in there when Fry's is out of business. Just saying. Lowe's, not a big, not a big one. Down here we have Publix, which is actually a huge grocery store in the southeastern United States. So they have a lot of stuff. The Staples is not a grocery store. Total Wine. That may or may not be where I got my delivery from. I'm generally a person who will just go out and get something at the store. I don't need someone to deliver it, but I'm not in a place that you have to pay for parking and other stuff like that. I'm just gonna drive my F-150, electric F-150 over there. But you'll see they got a lot of stuff that is actually a grocery store, and then they've got Petco, which I guess is groceries for your dogs. All right, so build the technologies that power every grocery transaction. I would say their biggest competitor in the space, by just pure competitiveness, is Instacart, but they are Instacart. This is why you don't drink a bottle of this. Is DoorDash, which they're just paying people to go get your shit for you. Let's be honest, that's what they're doing, because you're too lazy, because you don't have a car, because you don't want to do parking, because you're too high, because you're too drunk, because you drank a bottle of zombie. That's just what you're doing, is you're paying someone to go get shit for you. They build the technology that powers every grocery transaction. So they are talking about the total value of what's being ordered. Now that's very misleading, because I mean, like, this bottle should have been $11. They charge $15, plus I had to leave a Dasher tip on it. So I mean, they're inflating the price, and taxes not included on there. But they've had 263 million orders, $2.2 billion gross profit, and adjusted earnings before. Okay, cool. They have 1,400 retail banners. I'll tell you, a big proponent of Instacart for a long time, and I saw it during the pandemic and stuff like that, but a big proponent of Instacart has actually been Whole Foods / Amazon. Every time I go to Whole Foods, I see like 12 people shopping for Instacart. You know why? Because mommy wants to go to yoga instead of going to the damn Whole Foods. So she wants to put on her yoga pants and go to yoga instead of going to Whole Foods. So she's going to pay someone to do it. Again, I'm one of those that I'm going to go out and do something myself. They have 85% of the U.S. grocery market under their umbrella, 5,500 brands, and 80,000 plus stores. What they're saying is they're dominant in the market. I'm cool with that. I mean, that looks good. You're dominant in the market? I have no problem there. All right. I love how they use non-committal pictures, like not Ruffles, but wavy chips. You see, look, wavy chips. Again, let's take a look at the table of contents. Active brand. Okay, we're going to look at some of their glossary, because there's some things that we need to know when we scroll through this. I never know how long this document's going to take. A lot of it's fluff, but we're going to look at what we can look at, because this is what they present to you as the investor. This is what every company's saying. You have to look. Robinhood, SoFi, maybe Weeble's offering this. I don't really do anything other than short stuff on Weeble. So they're all out. This is what every company's kind of giving you the logic. So let's go over it. Active brand partner is a company or brand that has used one or more Instacart ads offerings in the last 3 calendar months. So companies actually advertise on Instacart. So they're making revenue from a markup they're doing to the consumer, plus they're making revenue. We're finding this out top line. This is like the first piece of text in their file. They're making revenue from brand partners. So when you open the Instacart app, which I just downloaded on here to get my liquor, but when you open the Instacart app, they actually have brand partners. Now, let me just I gotta sign in here. Okay, so they have brand partners. They have advertising other average order value. So the average order that people are actually spending on Instacart is, no shit, Sherlock, the average order value. A brand partner is a company that sells consumer goods. Hold on, I'm using that. Okay. So yeah, if I go ahead, I'm not going to put my address out in the world, but you can see these are your brand partners. And they're paying to be here. So Instacart's making money on markup to the end user who's buying their liquor bottles. And they are making a markup by selling to all these places placement. Because look, I just hit I want to buy something, and it's giving me Publix delivery by 8:25 a.m. Wait, who's going to deliver me this? And it's at 3:51 a.m. Walgreens can get to me by 5:15. Come on. Who could beat that? 8:30. 8:30. Ah, they don't have. See, here's what they're missing. They're missing some of the stuff that Uber Eats has, like Wawa, and they're not really a food deliverer. So I think the earliest we're gonna get is 5:25 a.m. And companies are actually paying to get that top line listing right there. You just see, I clicked on 7-Eleven. It's thinking about it. Gives me a nice little logo. I don't want to show everyone exactly where I live. So I don't need... Oh, so look, here's another upsell in the app. 0 delivery fee on orders over $35, 5% credit back. Lower service fee on all orders, $99 a year after trial. So again, they have a lot of places they're making revenue from, which I like. Richie likes. But I mean, look, we'll get back to this in a minute, but I mean, if I wanted a taquito, I'd pay $2.19 per taquito. They're like $1.50. How do I know that? Because I'm fat. Well, good God. One can of Pringles is $5. Was that Biden inflation? Look, the 7-Eleven fruit punch is cheap. A pint of ice cream, $8.39. Hey, look, better with Pepsi. Again, here's what's cool. When you read these documents, you learn who their partners are. You learn, like, you so poor you need some ramen? $1.79. Got cookies. A bottle of Coke. I might as well just order a goddamn bottle of Jack with a bottle of Coke. If I want some... I live in South Florida. They don't have White Castle here. So if I wanted some White Castle, I can do that. I am getting distracted by the 7-Eleven offerings. Okay, so average order value. A brand partner. Basket consists of all the items. Batch rate. The average number of orders completed per batch in a given period. CPG is a consumer packaged goods. A consumer. That's idiot me who bought the bottle of liquor for an overprice on Instacart. Just see how it works. And yes, they did have to check my ID at the door to make sure I was old enough to receive that liquor. Instacart ads. Well, obviously, did you not see how much Pepsi was just focused on what we just did? That's why Pepsi's in. Instacart Marketplace. Instacart Marketplace connects retailers, brands, consumers through our mobile app website for order, delivery, or pickup. Yeah, what we just looked at? That's the Instacart Marketplace. A retailer, a SKU, or a stock keeping unit. I only learned that a couple years ago. That's what SKU stood for. That's a barcode. Which is now going to RFID. Oh, look, we have a letter from the CEO, Fidgety. So when you put Fidgety on a merry-go-round, is he a fidgety spinner? Sorry, it's a 3:54 a.m. and I'm half a bottle deep in Bacardi Zombie. These experiences. Okay, so first time I truly understood Instacart's mission, I was standing in the aisle of a grocery store. Again, COVID, the illness, whatever you want to call it, really friggin' blew Instacart up. CEO of a major grocery retailer invited me to visit one of his stores to better see what made them unique. I was expecting to learn more about the logistics of day-to-day operations, and I did, but I wasn't expecting a masterclass in the care and craft to make the grocery industry so special. As we walked through the floor, I saw the CEO greet associates by name and welcome customers in the front door with a smile. Aw, look, this is a feel-good bullshit story. Massive global transformation, digital, okay. This, when they make something bold, they want you to read it. Massive global digital transformation is underway in the grocery store industry. Grocery is the largest retail category and represents $1.1 trillion industry in the United States alone. Only 12% of grocery sales are made online today. This is what's called a TAM, or a total addressable market. I can guarantee you we're going to see them talk about that. What they're saying is only 12% are done online. Let's pretend. Let's pretend grocery stores are a $100 million business. They're saying only 12 million is done online today. So they're saying they can go after, hope this math's right, $88 million more in business because no one's ever going to go to a goddamn grocery store again. Instacart is a grocery technology company. Cool. They partner with 1,400 national, regional, and local retail banners, meaning brands, and 80,000 stores that are 85% of the U.S. grocery market. Millions of households depend on us because they're lazy as fuck. I mean, I live in a suburban environment, maybe in an urban environment. This makes more sense, but I placed my first Instacart order earlier today. Instacart is building the services retailers need to invent the future of grocery and transform the customer experience. Again, this is their pitch to investors. Powerful e-commerce tools to build a custom online grocery store. Essentially, Instacart's pitching right here. I'm reading this for the first time with you. That they're a software as a service that a retailer can use to run their online store. Small mom and pop retailers. And they can actually advertise using Instacart. It's kind of trying to be Square and Square and Squarespace at the same time, and PayPal and all those other things. It's freaking interesting. Full range of fulfillment options to allow customers to order in minutes, hours, or the next day, enabled by best-in-class picking technology and a community of dedicated shoppers who speed every owner like it's their own. Retailers don't have to hire employees to deal with this shit, cause we got gig workers. We don't have to actually pay a living wage to do this shit, because they're flexible workers. They can do it on their own time. In-store technology such as connected hardware powered by AI. Yes, of course, it's 2023. Cheers to having the word AI in every fucking stock ad. That bottle's getting low. AI-powered smart carts, mobile checkout, electronic shelf tag. Oh my god, it's so much bullshit here. But it could be good bullshit. It's a good brand, even though they want to call it some other weird ass name. Transformation will play out over decades while you're making long-term focus. Every decision they make, company stems from a fundamental belief that in order to succeed, we need to work together. Oh, it's synergy. Come on, give me the word synergy. Give me the word synergy. Give me the word synergy. Work together with the grocery industry, supporting retailers, brand partners, continue affordable, accessible, personalized experience that can't find anywhere else. Oh, we're in the business of growing our partners' business, which is one of our core values. Grow the pie. Technology, yeah. So they're trying to bring technology to mom and pop retail. They're trying to bring technology to bodegas. What's a bodega? Kind of a shitty grocery store in the middle of a very urban environment. Yeah, maybe I'll pull up the SNL sketch later if I don't get demonetized by doing that. But yeah, that's a bodega. The future of grocery through technology. They partner with retail to help them successfully. Okay, there we go. That's your friggin' mission statement, and we've been assuming that for the last 10 minutes. Instacart is powering the future of grocery through technology. We partner with retailers to help them successfully navigate the digital transformation of their business. Instacart was founded in 2012 to bring the grocery industry into the 21st century. Okay, I don't give a shit about any of that. The future of grocery. Helping consumers, they find products they love from retailers they trust, no matter how they choose to shop. Grocery is the largest category in all of retail, with an annual spend, hey, I told you that, didn't I tell you they're going to go for the whole thing, of $1.1 trillion. 1.1 trillion in the United States in 2022. Despite the size of the market, grocery has significantly been slower to move online compared to other consumer categories. They're trying to be the Amazon of grocery. In 2022, only 12% of grocery shopping took place online, compared to 66% of consumer electronics, 38% of apparel. God damn. I got a Shrek rave tomorrow night. You'll see that. This is going on the channel too. We do everything from IPO's Shrek raves. I ordered Princess Fiona costume, so I guess that's apparel. 23% of consumer food service, 20% of food. So yeah, TAM. Look. Total addressable market. Online grocery penetration took 10 years to triple from 1% in 2009 to 3% in 2019. And in just 3 years, due to the pandemic, quadruple from 3% to 12% in 2022. People are lazy as fuck! Grocery retailers mean that the online success was critical. All grocers from large national players, local mainstays must prepare for the future. We're all special the business. Grocery retailers trust, loyalty, again. So this is going to read like bullshit. Yeah, we got the marketplace. That's what we looked at. The enterprise platform gives retailers, we're not going to be able to see that. Ads. Remember how Pepsi showed up all friggin' over? Well, that's because Pepsi's an investor. Instacart is built for the oak, so they enable more than 1,400 retail businesses, different named banners, including Fry's, because fuck you, Fry's, to really should have updated that before they released it. Accelerate the digital transformation of their entire business. Their retail partners include Aldi, Costco, Kroger, that's Publix, South Florida, Southeastern United States, Wegmans, Molly Stone's Markets, many specific use cases such as Best Buy, Lowe's, Sephora, Walgreens. Sales volume power top 20 retail partners. 5% of their total sales will go up from so they're saying that laziness has set in and people have become like characters from Wall-E and they don't want to go out. They just want to stay home and receive stuff, but that's why I order so much shit on Amazon. Okay, continuing. Largest and fastest growing e-commerce channels for consumer packaged goods brands. We provide discovery and an active return on investment. So they're making return from the markup they're selling to their end users. They're making return from the markup on the products. They're making return from advertising. Well, shit, they got a lot of ways they're actually making money right here. So I can't even be angry. Brand partners include Campbell's, Nestle, Pepsi, and emerging brands such as Banans, Chloe's Fruit Pops, and Wisp. I know Wisp. Shoppers. We offer approximately 600,000 shoppers. Flexible, immediate, and shoppers. Not shoppers like me that are, every time I talk about this friggin' Bacardi zombie, I have to get more. Not shoppers like me. Shoppers are the people who wear Instacart shirts and are basically in a cult and go out and buy all this crap. If people are convinced to do that with their lives, good on their asses. Shoppers. So they have 600,000 people, use Trump's voice, working for them. The best company in the whole wide world. 600,000 people working for them. Gig workers. They pay hourly. They pay no benefits too. I'm not going to say welcome to Joe Biden's America. Shit, I just said it. Okay, so the most important part of the job is picking the right products for consumers. Instacart tends to attract people who use empathy, efficiency, communication, problems. Fuck. To pick, pack, and deliver to order. Shoppers are deeply valued members of the Instacart community, but we're not going to give them benefits. We're not going to make them employees. But they're flexible work, gig economy. Shoppers are cheap ass human meatbags. They're going to make us investors, potentially a lot of money. Sorry for that sidebar. Business model. As more customers increase engagement, we're going to make more money. Orders grew. Okay, look. Perfect. Here we go. They've got 223.4 million orders in 2021, 262.6 million orders in 2022, an 18% increase, and remained constant for basically, they're saying, even though COVID's over, we're still making money because people are afraid to go to the store, too lazy to go to the store. COVID helped the shit out of this company. It's kind of like Zoom. But Zoom, people are being forced back into the office. Even the funniest shit is Zoom employees can no longer work remotely. Think about that for a second. Actually, have some zombie. Zoom, the company that made remote work possible, is now requiring their employees to come back to the office. Okay, I digress. But what they're saying is even after COVID's over, we're making more money. We're gonna get to, about the same. Look, 132.9. I need Siri right now. Hey Siri, what's 132.9 times 2?
The answer is 265.8.
265.8. I don't know if you were able to hear that, but 265.8. So they're gonna make a little bit more money this year. A little bit more money this year than they did last year. Total revenue grew from that many million to increase of 39%. And 6 months ended in June, an increase of 31%. Well, shit, their money's going up, but realistically, not too much. Again, they give you data that you need to look at. You need to look at this. Even though I'm 2 bottles of Kraken and mostly bottle of Zombie down, I'm not fooled by this shit. So watch. Hey Siri, what is 1475 times 2?
1,475 times 2 is 2,950.
2,950. So they're making slightly more. They're giving you some numbers to make it sound like it's still growing incredibly. Oh, shit. I like that word. Profit. Not a fan of what I just saw. Net income improved from 73 million in 2001. Oh yeah. Wait, they lost 73 million in 2001 and they made 428 million in 2021. They lost 73 million and then they made 418 million in 2022. Wait. Yeah, okay. Tax deferred assets. They still made money. They're not going in with the negative. It looks like high level. We'll get there in a minute. But high level. Segregated supply chain, grocery operations, perishables. That's important. You're not going to leave a set of bananas outside in South Florida when it's 114 degrees outside. Heat index. Competition for technical talent. Difficult to attract. Okay, so now we're getting into what's called SWOT. Okay, strengths, weaknesses, opportunities. So yeah, SWOT. That's right. So this is something you learn in business school. I have an MBA. I know it's weird. I know. Look, guy who's drinking Bacardi at 4 o'clock in the goddamn morning, waiting to order his iPhone, has an MBA. But we're talking about strengths, opportunities, weaknesses, and threats. This is a SWOT analysis. So what they're about to say is they're about to say what's fucked up in their industry. They're about to give excuses. So if their shit hits the fan, these are the excuses. Not much left. So if the shit hits the fan, those are the excuses. So they're talking about enterprise market structure. Hold on. Desegregated supply chain. There are multiple participants in the grocery supply chain, including food producers. So yeah, grocery operations. Look, they're even saying, this is my favorite, it might be hard to get programmers because programmers are in high demand and won't work for cheap money anymore. All of these tech companies have this in it. Lack of technology. So this is an opportunity, breadth of fulfillment options. Whether the customer chooses pickup, scheduled delivery, or on-demand delivery, yes, believe it or not, Instacart has a business model where they will send someone to the goddamn grocery store, shop for you, and leave it in the goddamn grocery store. Because the grocery store don't want to hire employees to pick up your shit. That's what they're trying to say. Limited personalizations. This is a grocery technology company. I don't think those words have ever been uttered from my mouth before. And look, they're talking about diverse customer use cases. So grocery is a large, recurring, non-discretionary, high-frequency consumer activity. Americans shop for groceries 1.6 times per week on average and spend $438 per month on groceries on average and have a wide range of brands and retailer loyalties. Given the grocery is a non-discretionary expense, people got to eat. And it touches a broad demographics of consumers. The value is critical. Urgency varies because sometimes people want to go to the grocery store and get a bottle of zombie water all over my desk. So urgency varies. Each time we categorize consumer shopping as a weekly shop, a bulk stock up. So that's like when you go to Costco, you buy toilet paper and water. Convenience, when you drive and buy, you want some liquor. That's a liquor store. And special occasion is a planned shop for a known event like a holiday, a gift, also requiring. Okay, so challenges as grocery stores moving to the 25th century. 20th, 21st century. They want to get the entire ecosystem there. Instacart Marketplace. Again, we looked at the Instacart Marketplace. What is the Instacart Marketplace? It's this shit right here, where I can literally order. Hold on. I can literally order like a Mountain Dew Big Gulp. Look, I'm fat, but I'm not that lazy. If I want a Mountain Dew Big Gulp from 7-Eleven, I'm just going to drive out to 7-Eleven. I'm not going to pay $1.59 for someone to deliver it to me. Actually, I'm going to give you the full price. Okay. So let's say I wanted a 7-Eleven Big Gulp. I don't want to show my address on the screen for obvious reasons, but I'm going to add to cart. I'm going to see $1.59. What's it going to cost to get a Big Gulp delivered? I'm not doing it during this video. You know why? Because the name of my channel is No Pants Profits. And you know what I'm wearing right now? So if I get up during this video, this is an uncut video. If I get up during this video, yeah, they're going to deliver it to me. Let me make sure there's nothing bad here. They're going to deliver it to me by 5:40 a.m. So it's 4:11 a.m. right now. I can make the order. I can make the order a gift. Oh, I need a $10 minimum? Shit, okay. So I guess I want a Slurpee, a water. Let's see. Oh, and a cheeseburger bite with bun. Because those are always ready at my local 7-Eleven. If you ain't ever been to a 7-Eleven, cheeseburger bite's fucking ridiculous. I'm going to give my DoorDash, in my Instacarter, a friggin' heart attack by wanting one of those. 926, and I need one more. God. All right. Oh! A taquito. This is terrible. So I got $11.45 worth of shit in my cart. Let me just go there. We'll see what that's really going to cost right now if I was really that hungry. Because I can't drive right now if you're watching this video. Instacart Enterprise Platform, fulfillment. Oh, sorry. I'm not sharing that with you. Fulfillment, connected services, Instacart ads. Yeah, people are paying for ads. Oh God, what do you want to charge me? Okay. Shit. I'm not giving him a credit card number. So I can pay. Oh, priority's free for me. I can't show you this on the screen because it's showing my address. Pay with. Okay. How much do you want to charge me? Oh my God. Good God. I'm not showing my address. I think we're good. Good God. It's $18.90 to get a Big Gulp, Slurpee, water, hot dog, and taquito delivered to my location. And look, I can finance my fucking orders. I hate this company and I love this company at the same time, because when you make poor decisions and you drink an entire bottle of zombie, you're gonna order Instacart. But I'm a Jew. I'm a Jew, a lonely Jew on Christmas. I think I have to do all these IPO videos drunk now. Makes it so much better. Best of digital advertising, precision, actionability, and measurability. We're advertising our strategies, deep partnership with grocers, trusted technology partner in the grocery industry. Scale benefits for Instacart as their retail partners. Oh, I said the word. You remember, like, I can't tell time anymore. What did I say? What the fuck did I say? I said, they're going to use the word synergy. Everybody uses the word synergy. It's right there. We're nowhere in this document so far. Breadth and grocery of user cases, ads. Look, they have so many fucking ways to make money that I'm actually impressed. I didn't know this before I started doing this video. Just how many ways they had to make money. God damn. They have it broken down for their retailers, the benefits. For their customers. You can buy anything you want on the internet. No shit. Welcome to Jeff Bezos in 2010. Member benefits with Instacart Plus. It tried to sell me that shit. If you remember, I was opening it. Oh God, what's it telling me? Oh, okay. I saw my Instacart order was on the website. No, I don't need that. I don't need an $18 taquito with some hot dogs. Instacart Plus provides customers a membership program, lowers the cost of online grocery. $30 in monthly savings. Yeah, they're trying to say when you're a member, you order more shit. Personalization. Yeah, it can know you high ROI. It's a tech company. It ain't a shopping company. It's a tech company for shoppers. Okay, for shoppers. For their employees. All right. Earnings potential. Since our founding, shoppers have earned $15 billion on Instacart and gotten fucked by us along the way. Trust me, if you've ever looked at Instacart. Not a company you really want to work for. Sorry, guys. They provide shoppers with the tools to manage their earnings, potential estimated earnings, flexibility. There's been a whole thing about whether the tips were included, whether the tips weren't included. I've kept up with Instacart over the years. Safety and care, technology tools, incentives. Oh, we recognize the hard work of our employees with impactful incentives such as priority access to batches. If you work hard, you'll get more work. Okay. Gas savings, recognition of the what if you've got an EV like me? You know, I have a friend. Sidebar. I have a friend in Vegas who just started working for Uber. He used to work for nondescript call center, started working for Uber. And you know, what's funny is Uber actually gave him a shitty EV and then upgraded him after he made some money from a shitty EV to a Tesla. Sorry. I said shitty EV, I said Tesla. I should just said shitty EV twice. Oh, comments are going to flame 56 minutes into this video. You know, they've gotten to the fact that it's so hard to find people who want to drive their own cars anymore that they're willing to rent you a car because people have finally realized the depreciation on their vehicle by driving the fuck around. So, help them stand on their own customers, increase access to earnings, reach their personal goals. Retailers recognize the significant value provided by enabling new use cases, fulfillment options across consumer brands. Oh God, I'm getting low. And business needs their end-to-end technology solution. Unlocking greater growth and efficiencies as retailers improve their omni-channel operations. They're able to reach more customers and bring new brands to their portfolio. Crap, my bottle's floating now. And meet the need. You know your bottle's empty when it no longer naturally hits the bottom. That's how you know your bottle's empty. Empty. Okay. Consumers appreciate being able to shop online with their favorite national or regional brand. They want to attract new customers and expand use cases. Hey, look, I made my first Instacart order for some Bacardi Zombie earlier today. I overpaid like a motherfucker. This thing's like $11, and I paid like $21 for it. Sorry. Okay. Grow online penetration, omnichannel offerings, introduce new use cases, and but. Sorry, guys. Since this channel's monetized, I get to write off my $21 bottle of zombie mix. It's almost empty. Okay. Increase access, grow Instacart Plus, because subscription services are great. People, they said it and forget it. I don't know why I've gone into Donald Trump, but you know, when I play poker, people are like, you do a reasonable Donald Trump. You want people to subscribe, because when they subscribe, they forget about it. And when they forget about Donald Trump's in New York, so I guess they forget about it. When they forget about it, then we're good. Okay. So, deepen their offerings for retail. Well, that sounds like a sex novel. Wait, I'm not loud enough to get over the voice. Deepen their offerings for retailers. Oh, yeah. Sorry, I wasn't getting over the noise cancellation. Pursue opportunities and acquisitions, extend their technology beyond grocery. Oh, wait, it's the first time we've seen it. Over time, we anticipate we'll partner with a greater number of non-grocery retailers like Fry's. You didn't understand that joke. Fry's went out of business, and it's still listed on their friggin' S1. Sorry, guys. Add more emerging brands, new ads, offerings, expand their. Oh, I'm running out of alcohol. Rapid growth. Oh, okay. So risk factors. Rapid growth. We have a history of losses, and we may be unable to sustain profitability or generate profitable growth in the future. Guess what? Unlike other IPOs we've talked about in this channel in the past, I'm talking to you, the deep cut motherfuckers. Okay, deep cut motherfuckers that have been here since day one. We were covering the Robinhood IPOs. Companies are saying we're never gonna make a profit. Here they're saying, hey, we weren't making a profit. Now we're making a profit. We can't promise that for the future. But they're still green right now. Oh, look, they're mentioning the illness. Oh, it's like we figured this was coming. We haven't done one of these in like a year and a half, but this shit's still here. It's 2023. The COVID-19 pandemic has had a wait, I can't do Joe Biden. I wish I could. Has had a significant impact on our business, and there's uncertainty regarding its future and the impact on any future public health operates on our future. Yeah, it helped them. It helped them. Instacart got motherfuckers worth of money due to COVID. 10 disclosure information. They're incorporated as Maple Bear Inc. in Delaware in 2012, because everybody incorporates in Delaware. I'm working in a new company right now. Anyone want to take a guess where it's incorporated? No shit, it's in Delaware. They're operated. The website is incorporated. Maple Bear Instacart. Okay, so they are offering 14. They're going to be 22 million shares. Remember earlier, they're offering 14 million shares. Common stock offered by the selling stockholders. 8 million common stock. So remember, the people that are already invested, and we'll get to that in a minute. We estimate that we're going to use our common stock to pay our existing shareholders. That's what they're gonna friggin' do. Anything else here is bullshit. All the people who invested in them back in the day are getting paid out by us dumbasses buying this stock. All right. Okay, there's a lot of bullshit here. Employee stock purchase plan. Nothing crazy. Restricted stock units, which is what you use to get new people into your company. Oh, okay. Is that positive money? Oh, that's common stock. We're not at money yet. We need to get to money. Oh. Diluted. Ah! It's great! It's great! I know, look at this. They're making freaking money! Holy shit, they're making money! There's not much left. Just a little bit. The ice is mostly gone. But holy shit, they're making money. Oh. See, when those numbers are not in parentheses, that means they're making money. They're not an Uber. They're not coming into the market negative. I mean, it's just the tip of positive. But it's still positive. They're making money. Looking for something negative here. That's all I care about. I want to know that the company's making money. It's probably trading at a price earnings ratio of 1,500 to 1. Net income. It's not bad. But it's not bad. It's not that negative. This is okay. This is okay. They have a history of losses. We only recently started making money. In the year that ended December 2022, they made $428 million. There was a tax benefit from the release of valuation allowance. There was some bullshit tax credits, but guess what? Those bullshit tax credits were still less than the $428 million they made. They're making money. I mean, it's tough, but they're coming to the market and making money. Look, our ability to generate profit is highly impacted by the growth of our diversified revenue streams and our ability to drive operational efficiencies in our business. For example, an important driver of our ability to sustain and increase profitability is the growth of our advertising solutions, and the pace which fluctuated may continue to fluctuate, including due to adverse effects of unfortunate macroeconomic conditions. Recession, no recession, Joe Biden, recession. Sorry, I drank a bottle of this zombie shit. It's like... oh, God, 19% alcohol. Sorry, guys. But also, you're getting truth. Basically, they're saying recession is going to cut spending habits. Ability to generate profit, increase the engagement of customers, restricted stock units, stock-based compensation for employees. There's nothing insane here. Again, they want to say COVID. Rising interest rates. Hey, look. Let's not lie. Hey, guys. What did we talk about an hour ago? What the fuck did we talk about an hour ago here on the show? Talk about rising interest rates. An hour and a bottle of zombie and two shots of Kraken and mostly a bottle of zombie. You go. We talked about rising interest rates. We talked about it's like cessation. Oh, look at this shit. Look at this shit right there. Cessation of government stimulus. Oh, good God. Look. And the actual or perceived risk of an economic recession. For those of you who don't know, we've been in a recession for the last 12 months. But much like what is a male and a female, we've redefined the word recession. So a recession is 2 consecutive quarters of GDP growth. We've been there for the last year. But as Dylan Mulvaney referred to as a he or a she. Flame my friggin' comments, but I don't give a shit. We're an hour and 6 minutes in. Those of you that are believers are still here. Sorry, that's the truth. You can flame my comments all you want, but we're in a friggin' recession, and they know it. They're admitting it. Again, this is all just SWOT: strengths, opportunities, weaknesses, and threats. Even when drunk on a bottle of zombie, I can tell you what these are. Fuck, give up on COVID by now. God damn it. It's over. They're saying because there's not another pandemic, there's an election coming up. There will be another pandemic. I said that on video, sorry. But since there's not another pandemic, they might need to had significant impact on the markets, communities. It helped you. For once, we're looking at a business that COVID actually helped. You could say, oh, shortages, grocery shortages, this, that. No, COVID helped your ass. They're saying if they get hacked, R.I.P. MGM Resorts. I'm a Caesars bro for life. That's a deep cut Vegas joke. Those of you who get it, that joke was for you. Unable to continue new features. Again, this is all kind of standard. I'm going to see if there's anything useful here, but guess what? They're fucking making money. I'd like to see an IPO where they're making money. This is telling me, beyond my better judgment, that I'm probably going to leave my 100 shares in there. Shit, that could be a bad idea. But let's do a little bit of reading. I think we're at the end of this. I'm going to scroll. We're only about a quarter of the way through the document. There's a lot of gobbledygook here. Basically, there's a lot of footnotes. There's money. As long as they're not in parentheses. See, they're good. Cool. Oh, look, we got history and milestone. Launched Instacart business in 2023. Okay, launched the San Francisco Bay Area. Launched Instacart Plus. Scaled to 10 major metros. Look at this. Look at it. Gross total valuation. That's some growth. Ask Instacart. Oh, look at that. Look at that. Holy shit. They can accept food stamps on Instacart. I'm going to declare Snap Ebit online acceptance in all 50 states. So they can accept food stamps. That's pretty impressive. They can accept food stamps. There's a Facebook group I'm a member of called Give Me Your Money, where people beg for money. A lot of them have food stamps. Sorry, guys. I'm just speaking the truth. Transaction revenue, total revenue, cost of revenue. Shit, everything's positive. This looks good. This looks good. So cohorts. Let's talk about cohorts for a minute. These are when the people joined Instacart, how much more money they've made Instacart over the years. Yeah. So what a cohort is, like a group, everybody who joins in 2017 spent a certain amount in 2017. In 2018, they spent 1.73 times that amount. In 2019, they spent 1.74 times that amount. In 2020, COVID, they spent 3 times that amount. In 2021, COVID, they spent 3.26 times that account. In 2022, which is the last full year they have data on because we're in the middle of 2023, they spent 3.52 times that amount. Well, shit. Their customers are loyal as fuck. That's what that's trying to say. So you know what? Oh, God. I don't have much left to toast. What that's showing with cohorts, that's when customers join and their LTV or lifetime value of the customer. Little sips, not much left. Their cohorts have all gone up over time. So their customers that are now their 2020 cohort has not grown as, and their 2020 cohort has actually gone down over time. Let's be very clear. 2020 cohort was buying 1 times, now they're buying 0.95 and 0.85. So the people who joined, let's translate this, okay? They had a surge of business. Let me let you see this chart. They had a surge of business during COVID, but that surge has not continued after COVID. That's the first negative thing I'm seeing here. 1 hour and 10 minutes into the video, your surge from before COVID is not continuing to after COVID. That's dangerous. But your surge from before COVID, your customers before COVID are spending more than ever. But your COVID surge is falling off. But your people who joined after most of the COVID restrictions, 2021, are continuing to buy. So 2020 is kind of a outlier. Sorry, I got the word right. An outlier here. Yeah, look. We've literally, and I did not read that paragraph. We've literally analyzed the COVID pandemic had certain impacts on our cohort behavior that were inconsistent with prior trends. During the COVID pandemic and its variant outbreaks, we expected a significant increase in the spend across all cohorts due to increased consumer demand for grocery delivery and higher order value, which is a significant factor in the growth value for our cohorts during these years, including a growth trend highlighted. The 2020 cohort performance is more nuanced given its unique COVID-19 driven characteristics. In addition to being significantly larger than our COVID, yeah, look at that. Look at that. Holy shit. It's almost like, I was not reading that down here. I was just looking at the graph. It's almost like I can analyze business data. Who the fuck would have thought? Over the near term, we expect this trend to continue. More of our recent historical cohorts, primarily due to the effects of COVID going away. Don't worry, it's coming back. My bottle of zombie says it's coming back. Some trends first happened. Okay. Cohorts in line with the same period in 2022. 2020 and 2021 cohorts declined relative to the same period in 2022. Okay. Shit. Okay, this is worse than we think. Because you show it in the graph, it's one thing. You talk about it, it's another thing. The 2020 and 2021 cohorts declined relevant to the same period in 2022. Mere COVID-driven demand. Shit. I don't like this. I don't like this. It's gonna probably make me lower my buys. Because I don't like this. And spaghetti monster. I don't like this. It's not good. See that orange section? See that orange section collapsing over time? That's not good. Everything else has been some happy-go-lucky bullshit. We're not doing happy-go-lucky bullshit anymore. This is not good. Because you know why? This is when they became profitable. Shit. Those of you that have watched 1 hour and 13 minutes in, so you scrolled enough in this document that the company's fucking broken. I think I'm gonna take away all my shares. Oh, God. You see the orange? Y'all see the orange, right? Hold on. Y'all see the orange, right? The year they became profitable, that customer's going away. The new customers are not scaling as fast as the old customers. Shit. I need more to drink. I don't know that I can recommend Instacart anymore. For those of you that have made it this far in the video, I'm sorry. You've wasted an hour and 15 minutes, but you know what you haven't wasted? I mean, you haven't wasted a bottle of zombie. There's a little bit left. I'm gonna hold on to that. You haven't wasted your money. It looks like Instacart's dying. Look at the graph. This is bad. This is page 110. Page 110. You know, I'm even gonna go in. I'm putting this on my phone because I'm gonna make a YouTube short that's gonna say page 110 of the S1. Page 110 of the S1 shows that the business is dying. Yeah, it was profitable, but that profitability is going away. Look, even average order value is falling. Holy shit, this is not a growing company. Fuck this. I don't want anything to do with this. Yeah, we're an hour and 16 minutes in, but fuck this. Sorry, guys. That one, look, this one slide is the single most important slide you're going to see. They're fucked. They're fucked. They're fucked. I don't want anything to do with this company. I don't really care what anybody else says. Oh, look, they're getting snapped. They're selling alcohol. Who would have known they're selling alcohol? They're fucked. The new customers they're spending in they're bringing in are not growing as fast as their old customers. I don't care about any of this. I really don't. I really... Wait. Look at this. Look at this. By annual cohort, but they're not bringing in new customers. They're trying to hide this data. The people they brought in during COVID are not spending as much anymore. The only reason they became profitable, the people they brought in during COVID. Think about that for a second. Customer acquisition costs. I love this. I love the CAC. CAC's my favorite thing. That's how much it costs to bring in a new customer. Shit. Shit. Look at these numbers. You fucking kidding me here? This CAC is fucked. This CAC is fucked. Did I say that again? This CAC, customer acquisition cost, is fucked. In 2019, it cost them $24, or it cost them $87 to bring in a new customer. In 2020, it cost them $174. 2021, it cost them $391. In 2022, it cost them $625. Yeah, this is fucked. This is fucked. I can't recommend you buy this IPO. I mean, this data is just bad. I was rosy. I was nice. I was rosy. I was drinking my Bacardi zombie. And then all of a sudden I saw that everyone they picked up during COVID is no longer a good customer. And their research and development expenses up. Dude, guys. Oh, fuck. I mean, I don't need anything else. We'll read the other articles, but I'm gonna play the game of save your fucking money right now. Everything here you're seeing is a lie. Look, hey, look, impact of COVID-19 on orders. Look at this. It's showing we're right. We're doing this in real time, an hour and 19 minutes in. Holy shit. They are fucked. I don't want anything to do with this company. Yeah, no, none of this continued growth at scale bullshit. Your growth is cutting off. I don't care about any of this. 2020 cohort, orange. Pay attention to the fucking orange. It's fucked. Your orange is fucked. And those are the new customers you brought in. Look, they're admitting this. Holy shit. 138. I'm gonna make a YouTube short. They are fucked. Instacart is fucked. How many F-bombs can I drop an hour and 20 minutes into a video? I mean, the data, look, you don't need any more than that chart. Wait, hold on. Not that chart. That chart. See the orange declining? See the orange? Better fucking see the orange. The orange is their profit. They're fucked. You know why? Because people like my ass want to go to the fucking grocery store instead of paying someone to bring them overpriced shit. Instead of people freaking paying $18.90 for something that should be $10 maximum. They're marking up the price here. Look at this shit. Look at this shit. Service fee. Instacart platform. What the fuck is this? It's trash. I'm sorry that I'm cursing right here. I'm sorry. Parental advisory involved. They're done. They had a nice spike during COVID. Fuck this. I don't want any part of the Instacart IPO. You know why? Because this whole document we're looking at, the people who are already in, the venture capital people and stuff like that, they've seen this document. You know what they know? There's a little bit of zombie left. They know it's fucking time to get out of this sinking fucking shit. People want to buy it, go to the grocery store. They want to thump their own watermelons. They want to look for the brownness on their own bananas and everything like that. What Instacart's going to do, I'm not going to lie. Here's what's going to happen. All-seeing crystal ball. It is top right on my screen. It is Friday, September 15th, 2023 at 4:43 a.m. Instacart is going to price their shit at the top of the range. I don't want shit to do with that. I am taking all of my buyer. Look, I'm going to do it together. You know, fuck that. Fuck that. We're going to do it together. Whatever I can do. Look. Edit request. Cart. See it right there. Edit request. Fuck you. 0. Right. Fuck you. 1. Went from 100 to 1. Boom. I can't be any part of this. They're going to be greedy pigs. And what are they going to do? They're going to try and price it well above the ARM price. Advanced research machine, whatever it is. They're going to price it above the ARM price. And their cohorts are fucked. The only cohort that ever made them profits is fucked. I mean, I'm not even kidding you. I wish I was. The only cohort that's ever made a profit for them. I'm trying to, hold on. I'm trying to get out of my, okay. Yeah, I mean, fuck this. Okay, I can't actually, I put 100. I need to not confirm this, or I put it at 1 share. Instacart is fucked! And I don't think anybody's seeing that. Yeah, we're done with it. I'm going to scroll the rest of this document just so you can kind of see nothing here. Look. Grocery delivery versus pickup. Hey, you remember our orange friggin' people? Everything that's orange turns to shit. Wegmans. Look, they're fucked. They only became during profitability due to the scare tactic of COVID-19. Which, maybe it's the zombie talking. COVID-19 is aerially transmitted. It's not transmitted via touch. So they scared people. The government scared people about that COVID-19 was transmitted. Look, not gonna lie. My mom was wiping down her fucking groceries with a friggin' rag. With the cleaning cloths. When she go out to, she never ordered Instacart. Bless her heart. But she was wiping them down with a fucking Clorox cloth. COVID put this company at profitability. It's never going to make money again. There's a certain laziness that's involved. But you know what's happening with this IPO? It's just people fucking exiting their shit. Again, we're finishing the document, making sure there's nothing there, and then we're gonna take a look at some articles. Director compensation. Oh look, competitors. Oh no, companies, the people who use. Oh fuck, fucking hell. Snowflakes, Snap, Zoom. Look, we talked about all this shit. Robinhood, SoFi there? No. Pinterest, like look at this shit. Oh, good God, yeah. All this is held up by bullshit. Nobody believes the bullshit anymore. They're fucked. They're completely and utterly fucked. We're going to read articles. They're going to tell you, oh, this is a good company to buy in. Look, it might surge at first, but it's going to fucking collapse. They're going to get excited because of AMD. They're going to get excited because they're a profitable company as well. And they're going to say, you're gonna get fucked if you buy this IPO, because they had one cohort in 2020 that made them okay, no, I'm scrolling, I'm seeing, look, I don't give a shit about these financial statements anymore. I saw all I needed in those orange bars. If COVID doesn't continue, they're fucked. Do you know what this is? You're gonna laugh. Instacart is the Joe Biden campaign of stocks. I said it. We're now in 27 minutes into this video. Instacart is Biden 2024. I'm probably gonna make a YouTube short because I can't expose it this early. I'm gonna probably make a YouTube short explaining that Instacart is Biden 2024 and why. Because here's what we're gonna do. We're gonna making sure there's nothing crazy here. Look, all these numbers mean fuck hole. Hey, we saw that in my screen a few minutes ago. Table of contents. Instacart, also known as some other garbage company name. Fucking sue me right now, fuckers. I'm not recommending any of my people buy Instacart. Let's read some IPO things. Instacart's IPO price is seen as a bellwether for public investors. $9.3 billion. It's not going to be a decacorn. This is going to fucking fall from grace as soon as all their existing investors sell their shit. We're looking at pitchbook.com. This is not the IPO window Instacart was looking for. No shit, it wasn't. Instacart's fucked. I don't want anything to do with this fucking company. I don't want shit to do with this fucking company. Let's watch any of this garbage. Who's this gonna be?
When we challenged ourselves to create the world's most emotional and sustainable vehicle, we had to think differently.
Sorry, we have a Fisker ad first.
Push the boundaries to not just create a car, but a movement. Every Fisker Ocean is produced with over 50 kilograms of ethically sourced, recycled materials. It's about accomplishing something bigger than itself. A clean future for all.
We got some news just out. Instacart's highly anticipated IPO, well, it's happening now. Leslie Picker joins us with the details. Leslie.
Hey, Andrew. Yeah, it feels like we've been talking about this for years. I think we have. Instacart kicking off its IPO roadshow today, revealing a scaled-down offering size and valuation. The grocery delivery company plans to market shares between 26 and 28 apiece, according to an amended S1 out moments ago. That implies
They're going to try and sell for at least 30. Because people are fucking stupid, and the AMD deal went so big. It might be the tiny amount of zombie left talking. But this company's fucked.
a valuation as high as $9.3 billion on a fully diluted basis, which includes restricted stock units in the share count. Now, that's a quarter of Instacart's $39 billion valuation in a private fundraising round just 2 years ago, and reportedly below the valuation from its most recent round at the end of 2022. But a more conservative
Because it's fucked!
valuation is in part a sign of the uncertain times for companies looking to go public right now. Instacart said in May 2022 that it had filed confidentially for an offering, but then punted its offering as public tech companies sold off and interest rates rose. Chip designer ARM also planning a smaller IPO than it had reportedly.
It's so funny because we spent the last hour and a half coming to this conclusion. Honestly, I've not watched any of this shit yet. We're going to go through all the articles. We're going to see if everybody's coming to my conclusion. But I'm one guy who wears no fucking pants and can't stand up, can't take a piss, can't take a shit because he's wearing no pants and has just a tiny bit of zombie left. But let's continue.
Considered. Instacart, along with selling stockholders, intend to sell shares in the IPO. The offering size, based on the current range, is about $616 million at the high end. Norges Bank, TCV, Sequoia, D1, and Valiant are serving as cornerstone investors and have indicated
Hey, look, Pepsi's on board. Who would have thunk that?
that they plan to purchase shares up to $400 million total. Pepsi also agreed to a private placement concurrent with the offering. Now, Instacart plans to list its shares on the NASDAQ under the symbol CART, and is expected to start trading next week, guys.
All right, my prediction, they're
We
going to go...
challenged ourselves to create the world's most.
My prediction, they're going to go for at least $40 a share.
Bringing in a new roommate to save
dumb-
money? Is
wait.
that the plan?
Because dumbasses are going to pay it. You, as no pants professors, profiteers, should not be dumbasses. This company is fucked. The only reason they ever made profit is because of COVID. But let's continue. This is an interesting article. I opened up the article before, but I did not. Instacart set to raise IPO price. Set to raise IPO price after successful ARM debut. To raise the price. They're going to sell for over $30 a share. But as soon as the insiders start selling out of this shit because they realize COVID's over, they don't want to be part of it at all. Oh, look. Instacart is in free... Look at the 9/11. Instacart is in free fall as valuation published. Instacart's latest valuation, tens of billions of dollars below what the company was once worth a year ago. The company attempts initial public stock offering. Online delivery. Yeah, because COVID fucked them. Trading on NASDAQ under CART, great symbol. History of losses, but recently began generating a profit. But guess what? Your profit cohort has gone to shit. I'm going to make a short about this and probably get sued by Instacart. But I think I have the data to back this up. No one else is reading the S1 and has the data to tell you to stay far the fuck away from Instacart. Far the fuck away from Instacart. I'm probably going to put COVID in the title here. I'm coming up with this right now. I'm going to put COVID in the fucking title here. And I'm probably going to get demonetized because I'm going to say, there's no longer a pandemic, so Instacart is fucked. Because everyone they brought on during the pandemic is no longer spending. No one's saying this. Look, they're a pandemic darling, growth during the height of competition increase, increasingly growth, demand given to stabilize. Oh, hold on, sorry. Sharp drop in orders, new offerings. No one's talking about the cohorts. The cohorts are where it's fucked. Instacart dropped a... Dude, I can't be anywhere near this shit. I mean, you saw me. Look, a few minutes ago. If I could, I would do it on SoFi. But SoFi is being a bitch right now. Robinhood? I've dropped my shares. Okay, look, up next. Oh, look, I got 1 share. I'll take 1 share of Instacart just in case anything happens. Instacart is fucked. Simple IPO valuation. They're negative. Look. Everybody doesn't want to say the part out loud. Look, let's Google. Please be with me. 2020. Does anybody mention it? Nope. No. Instacart. What this is showing is no one has really found this yet. Their cohort's fucked. Instacart did a massive business model change for IPO, unclear path profitability, and the competition's heating up. Look, I'll show you what I'm looking at. It's a YouTube video. I don't even need to look at this. Let's look at some shit from Instacart from 2 weeks ago. Let's see the bullshit they're throwing on people right now. You notice that in a very short period of time, I realize what's going on with this company. That's why you read S1s. For those of you that with me, now look, for those of you that are still here, an hour and 36 minutes into this video, that drink's for you. Look, it's an uncut video. I went off to show you an Instacart video a bit ago, but look, one bottle of Instacart ordered Bacardi Zombie, 2 bottles of Kraken. No. Everything's in a... Look, I put the bottles of Kraken in there too. I mean, Instacart's fucked. But let's pretend.
Prepariamoci tutti per andare. Prepariamoci tutti per andare. Siamo state qua troppo tempo. Oh oh, io sento il vento soffiando. Pronto per andare. Pronto per andare.
Cool, I guess. I mean, just for giggles. Let's see the bullshit the Instacart's putting out around their IPO. Look. Oh, look, there's things not in English because they have to expand to new markets. Instacart app for Shopify. Okay, let's take a look at this.
That's how much we made the first day we launched our Shopify store.
And that's from only 381 orders.
So
Sorry.
Here's how the store came together. First, we came up with designs.
That's Shopify, not Instacart.
Instacart is North America's leading grocery technology company
For now.
and reaches more than 95% of households in the US and Canada. So if your products are currently being sold by one of our 1,200 plus retail banners, you may already be driving sales on Instacart without even realizing it. And with our help, you could potentially drive even more. So download the Instacart app for Shopify and discover your brand's potential on our platform. With the Instacart app for Shopify, you can easily sign up for an Instacart ads account, sync your entire product catalog to our platform in seconds, review your ad campaign's metrics and KPIs, and report on your Instacart sales data, all without ever leaving your Shopify merchant dashboard. Maximize your brand's potential.
Yeah, fuck this. I can't watch this anymore. I mean, this is just horse shit. Let's just try Crunchbase. So this is going to show you who the companies are that have invested in companies like Instacart. Let's do it. This is a COVID darling, like Zoom. they've bought 7 companies. Never heard of friggin' any of them. Wedding companies, and look. They have brought in 37 investors. Oh, I can't get that without having, yeah, because they make it hard. Financials, total funding amount, log into view. Let me see if I can log into view real quick. I don't have a pro Crunchbase account anymore, but maybe if I'm logged in, I can actually view it. Oh, look. They brought in 2.9 billion, and they're trying to be a fucking decacorn. What a fucking joke Instacart is. What a fucking joke Instacart is. Should I say that again? Full screen? Instacart is a fucking joke, and you shouldn't be anywhere near it. I'm gonna make a YouTube short because we're an hour and 40 minutes into this, and you watch me go from loving Instacart to understanding the truth behind the fucking company. Their entire factor of profits relied on COVID, and that cohort, meaning the people who joined during COVID, are no longer using Instacart because they're no longer afraid of wiping down their fucking groceries. Instacart's fucked. Look, Instacart is completely, totally, honestly fucked. You might say, hey, Rich, why can you say that? It might spike right at the beginning. Because guess what? You know what it's doing? It's riding off. Look, I'll tell you honestly, it's going to be riding off of ARM's friggin' coattails. Look, I'm up 36.17% in ARM in one day. Yeah, I got 7 shares because bullshit. But look at Oddity. ODD. Oddity has no dividends. That's probably let's go to Robinhood. Let's go to Robinhood. Guarantee they don't have a problem. Oddity. What's their price earnings ratio? Okay, they have 100 price earnings ratio. That's fine. But I mean, look what Oddity's done in the last 3. Well, I mean, it's gone up a little bit. It's gone up $1 in the last 3 months. But I mean, let's look at ARM. Shit, I'm sobering up. Let's look at ARM. Their price earnings ratio. We're not even getting one of those yet, are we? Because it's so new to the market. But market cap, yeah. ARM is a licensing company. Instacart is fucked. We're an hour and 42 minutes into this video. We're also... See the blue there? See it? You see it? I gotta finish it. Stay the fuck away from Instacart's IPO. I'm not a trained seal. I can't balance out on my nose. But here's what I'm telling you. They're lying to the market based on the cohort they brought in 2020 for COVID and saying they're profitable. They're not. Look, look. Look, Instacart. News. Stripe. Oh, wait. It ended. It almost knows what I want to search. Instacart 2020 cohort. Instacart, all about grocery delivery. No longer, yeah, they want to deliver fries, because fuck that shit. Dude. Instacart's entire business model of becoming profitable relies on COVID. I can't, in good conscience, tell you to invest, to buy Instacart. Me, my bottle of empty zombie. Going in ice water real quick. Sorry, guys. Oh, it's cold. My 2 bottles of empty. Oh wait, there's some rum in the bottom. Kraken. That's a good rum. You're not gonna find a better rum to mix with some cherry coke. Oh look, there's more Kraken worm in the bottom because technology. Look at that. I'm taking all my orders out of Instacart. This is very different than anything I've done before. No Pants Profits. This is Richard saying stay far, 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 far the fuck away from Instacart. Because their cohort from 2020 that made them profitable is leaving them. And they're not getting new cohorts. Cohort is a group of customers that come in a given year and you track their spending over time. Their cohort from 2020 is leaving them. An hour and 45 minutes and 16 seconds in. It's Richard from No Pants Profits saying stay far the fuck away from Instacart. And what no one else is saying, when you wear no pants like me, there's only one thing you got left to lose. And that's your shirt. I am going to see you on every IPO from now on because I miss doing this. I'm not going to lie. I've been on cruise ships. The interest rates have been increasing. If you've been with me the whole time, I love you. You're my people. I literally have taken a darling that everybody says is going to do well. And you know what? It might do well at first. But you know what's going to happen? All the insiders are going to fucking sell off because they know. What you know, what no one else is saying, is that their 2020 cohort is fucked. Ugh. I got water here. Remember the ice that was here like an hour and 46 minutes ago? Their 2020 cohort is fucked. You know this. No one else wants to talk about it. It's amazing, but just like me, I wear no pants. I still wear a shirt of Spider-Man, pointing and complaining. So, much like Richard, please, look, I'm not asking you to like and subscribe because I fucking hate saying that, especially an hour and 46 minutes into the video. But if you got any questions, drop them in the comments field, but Instacart is fucked. This is Richard from No Pants Profits reminding you. Well, I'll be back on a cruise ship next Sunday. I'm going on the Carnival Celebration Day. Look, I can tell you where I am if you're an hour and 46 minutes in the video. We're on the Carnival Celebration on Sunday, the 24th. If I see you on board, I see you on board. There's one person who commented already that's like, I'll see you on board. I love you all. I don't ask for anything from you. I just want to bring you information. I just want you along on the journey while I empty a bottle, multiple bottles of alcohol. This is Richard from No Pants Profits reminding you that I love you all. I'm not going to freaking say like and subscribe because fuck off. But when you wear no pants, there's only one thing you got left to lose. You know what that is? Drinking the melted ice here. When you wear no pants, the only thing you got left to lose, that's your shirt. This is Richard from No Pants Profit saying, I'm back, baby! And let's do some real IPOs. I'm gonna make you some real money. Have a great one. Bye!